a lot depends on what happens with the Fed and with mortgage rates going forward. So mortgage rates are one of the major challenges that home shoppers in today's market are facing as they climb. They're up very close to 7%, haven't quite crossed that threshold yet, according to Freddie Mac's data out today, but very close to the highest levels in 2 decades. At the same time, home prices are high and continue to rise. And that 1-2 punch of higher prices and higher mortgage rates make it very difficult for home shoppers in today's market to find a home that fits their needs and still also is affordable within their budget, because budgets are under incredible pressure right now because of the inflation that is happening economy wide. So it's home shoppers today are in a tough spot.
Yeah, I mean, you just sort of crunch the numbers and it's easy to see where the slowdown is. You're looking at a 30-year fixed mortgage at roughly 7%, sometimes a little higher, sometimes a little lower. So the mortgage rates or the monthly mortgage payment is more expensive. At the same time, I've seen a lot of price cuts for homes that are listed right now. And I wonder what you're seeing on the seller side of things. You know, how much pullback are you seeing there? Those who are saying, look, I can actually make more money renting out my property than trying to sell it when you consider where the buyers are.
Yeah, I think that's an excellent point. So if you look at the total number of homes that are on the market, those are up compared to a year ago. And that's because we've had buyers pull back a little bit. Homes are taking longer to sell, as you mentioned, and it's difficult for buyers to navigate this market. When you think about what sellers are doing, we look at newly listed homes, and those are actually down on a year-over-year basis. And that's because sellers who have other options, who don't need to sell right now, are exploring other options, either choosing to stay put, maybe remodeling if they need to stay put and change the needs of their house, or renting their homes out, as you mentioned. So sellers or homeowners in today's environment are aware of the fact that the housing market is challenging for buyers and aren't choosing to list at the same pace as they have in previous years, staying put instead. That's keeping home prices relatively elevated because even though we have more homes for sale, we still have fewer homes for sale than was normal in the market before the pandemic. And so we have more balance than you would expect, given how much of a pullback in demand we've seen in the housing market.
Really quickly, Danielle, the Fed hasn't shown any indication they're planning to slow down the tightening soon, given where inflation is right now. So when you consider that being the driving factor behind this housing slowdown, how much longer do you think this lasts? I mean, are there parallels to draw from previous market pullbacks?
Yeah, I think we are going to see mortgage rates continue to climb until inflation is back under control. So it's more about what happens to inflation, what's driving the Fed to raise rates, than the Fed's actual policy decisions. Once we see inflation start to move back convincingly toward that 2% target that the Fed is aiming for, then I think we'll see mortgage rates steady, maybe even start to decline in anticipation of the Fed's eventual pullback in monetary policy. But that could take until the end of next year to happen. So I think we're in for a challenging year ahead for the housing market.
Realtor.com's chief economist, Danielle Hale, appreciate your time this morning.